Hello and welcome to Business Incorporated. We see the Thursday trading session is moving along quick. Let's get a check on what to expect. Relief for Egyptians as inflation rate hits a two-year low at 24.1% in December versus 25.5% the month before. And Zambia's kwacha struggles with persistent drought weighing on the currency, highlighting the ongoing struggle. And Kenya becomes a hotbed for investors as startups raise 82 billion shillings. It's great to have you join us on the show. Let's get a check on what's playing out with the markets now, starting with the metals market. We're seeing price movement right there in the metals market with a profit taking, going on right there. We're seeing spot gold ease about 0.1% to $2,659 per ounce in early trade. U.S. gold futures, that rose by 0.2% to $2,678 per ounce. The bullion hit a near 4-week high in the last session after a weaker than expected U.S. private employment report. That's hinting at the U.S. Fed might be more cautious when it comes to rate hikes in 2025. We've heard from the Fed chair there that we might get about 2 rate cuts in 2025. Analysts are expecting about 4, but we'll see how that plays out. It all depends on what happens with inflation. Let's get a check on oil now. Seeing oil prices, they're down again, extending losses from earlier. Brent is down about 0.17% at $76.04 a barrel. WTI, we see that's down 0.27%, $73.14 a barrel. Markets are still expecting more info when it comes to China and the stockpile. We'll see the stockpiles there weighing. That's the U.S. stockpile. We'll see how that impacts markets. When the stockpiles go up, we see that means that more oil is going to flood the market. But when it goes down, that means that something might be happening that might actually prop up the prices. All right, so all the stories now. Nigeria's capital importation, that rose by 224% year-on-year to $9.04 billion in 10 months last year, and that's according to data from the Central Bank's economic reports for the period. The report indicates that the amount, which is significantly higher than the $2.9 billion capital import value reported in the same period in 2023, indicates increased foreign investment in the country. At the same time, the report shows that capital outflows, that also grew by 77.5% year-on-year to $8.24 billion in the period under review versus the $4.64 billion recorded in 2023. The CBN report notes that the month-on-month increase in capital inflows was driven mainly by increased portfolio investment in both equity and money market instruments, with the banking subsector accounting for 49.21% of the total inflow. However, on a quarterly comparison, the capital inflows fell by 21.2% to $2.6 billion in the second quarter of 2024, down from $3.3 billion in the first quarter of last year. And the Postmaster General, Chief Executive Officer of Nigerian Postal Service, Mr. Tola Odeyemi, says NIPOS is ready to collaborate with Lagos State government to drive innovation, boost economic development, and enhance public service delivery. The Postmaster General made this comment when she paid a courtesy call to the Governor Babajide Sanwo-Olu at the Lagos House Marina. She commends the Lagos State government on its giant strides in governance and infrastructural development across the state and promises to support the growth of the state through NIPOS service.
I would like to quickly present a framework for collaboration between the Lagos State Government and NIPOS in areas that will drive citizen engagement, innovation, and boost economic development. As Postmaster General, one of my primary goals is building a NIPOS of the 21st century that would enhance efficiency, that will support economic development, and bring back NIPOS to the relevance that it was. This visit is not only a call for collaboration, but a commitment to mutual progress together so that we can enhance public service delivery, stimulate economic growth, and set a standard for excellence for other states to follow. We've already said that we'll continue the engagement, particularly on this, and maybe hopefully Lagos State will be the first point of rollout for this program.
You mentioned things around e-commerce, around warehousing activity. Why not? Anything that will make ease of doing business for us better, anything that will make the people that we're serving not having another level of bureaucracy, we're willing to do it. So we're excited. If you say you want to be part of our food and logistics, so be it. We're open, to ensure that anything that can enhance what we're developing or building, we will certainly be willing to work with you. One place that I know that, one thing that you have, which you can indeed, I don't know what is the plan, are your infrastructure that are dotted, all around the country, and how best, what kind of service center you want to turn them to. We can collaborate, Don't just be restricted to this is what I meant. Challenge your minister, challenge whoever it is, and say that you want to make a change. It's just that you guys have to just think and think very, very well, for you to be able to meet, the reality of today in our state and in our country. We are willing to collaborate. We are willing to support you. Everybody's here. EGIS, we have the best, updated EGIS, geospatial photograph now where, we can pinpoint any location, and these are the kind of things that, you should be rendering as services. So we want to wish you well.
All right, to our first conversation now, we see Africa is poised for continued economic growth in 2025. We'll discuss the factors driving this growth and key risks and challenges and the opportunities for sustainable development across the continent. Joining us for the conversation, we have Isaac Marshall, investor at TLG Capital, a private investment firm. Great to have you on the show. Happy New Year.
Happy New Year to you, Lottie. It's a pleasure to see you again.
Yeah, it's good to see you too. So, talk to me about the key drivers of economic growth in Africa in 2025. We see most African countries did do well, somewhat, when it comes to some of those macros like inflation and currency strength in 2024.
Look, I think your assessment's correct. I mean, we looked at the intensity of macro shocks that many African economies and frankly consumers, everyday people went through in 2023 and 2024. I think that in many African economies, you're coming out of what is really a kind of a bottom and a really severe set of shocks. And I think that there are two dynamics that are at play here. The first is the dynamic between inflation and currency. So in many African economies, they're net importers of consumer goods, everything from rice to toothpaste, all these goods are imported into the country. And the result is a consistent downward pressure on currency. That in turn pushes the price of those imported goods up over time, which drives higher and higher inflation. And this is very difficult for a central bank to tame because, no matter how high you raise interest rates, you're not going to stop people from buying rice or the core staples that they need to eat. And the second dynamic is for an investor, the same challenges create a liquidity problem where if I'm an investor into an African market, I have to return capital to my investors in some reasonable length of time. And the challenge I face is that there's not enough market participation in order to exit that investment to return capital to my investors. And, we'll talk through kind of some of the specific dynamics, but those are really the two key challenges I see to increasing investment and increasing growth in African countries. And I think, in that context, 2025 looks brighter for both of those dynamics than certainly the last 2 years.
All right, so, looking at 2024, we did hear about the central bank, clearing some of these backlogs and dollar obligations, to, some foreign countries and some manufacturers, here. So would you say there was an improvement in getting money back from Nigeria to your investors? Just looking at Nigeria.
Oh, yeah. Look, Nigeria for sure. Absolutely. I mean, I think we're very optimistic on Nigeria. At the level of the fund, we're allocating about a third of capital to Nigerian investments in 2025, which for a diversified fund you can appreciate is a pretty heavy allocation. And I think when you look at what's happened, I think you've seen stabilization of the banking sector. I think Cardoso's been doing a good job at kind of stopping a free fall in currency, at alleviating concerns about systemic risks in the banking sector. I think you still have inflation at relatively high numbers, but there's really been a pause, and no one's concerned about kind of runaway inflation, although it is significantly higher than officially reported, and with massive negative impact on everyday people. But I think in Nigeria, a lot of the bitter medicine has been kind of taken. And I think at the moment you see a similar situation in other countries, like Ghana, for example. We're fresh out of a restructuring of the sovereign debt. The Bank of Ghana pushed for recapitalization of a number of the banks, and so you don't have the concerns about negative equity, right? I mean, people were concerned that the entire banking sector of Ghana was underwater. If you looked at kind of the beginning of last year, and now I think that's been resolved. By a lot of accounts, people think that the CD is probably slightly undervalued. Today it's about 15-16 to 1. It probably has room to go to about 11 to 12 to 1 if you just look at sort of an inflationary based model. And I think there's a lot of optimism about a new president coming in play. A president who's had experience before. I think speaking about all the right issues, the need to sort of get inflation back under control, the need to, as a corollary to that, reduce electricity prices, enable local manufacturing. I think when you look at several other African markets, you see a similar dynamic. I think Kenya presents some more concerns, and that I think that they aren't quite as far down the road. Ghana and Nigeria both went through a gauntlet of crazy macro environment, and I think Kenya is a little bit earlier on in that slope.
All right, and definitely we have President Trump now making a comeback. Should be sworn in by 20th of January. So what does the Trump presidency, mean for most of these top African economies when it comes to inflation and currency?
I think that the two key dynamics here are, one, what happens to the dollar. I think that the policies being pursued by the Trump administration probably portend a stronger U.S. dollar. I think that's certainly what happened in the first term of the Trump presidency. But at the same time, I think that there's a lot of questions about U.S. markets. If you look at, for example, the median technology company in the United States today is 9.9 times levered on an EBITDA basis. So basically that tells you that the average loan being given to a technology company, it is assumed that the company will not be able to pay back the debt and will have to refinance out the debt. So if eventually, people have been talking about a bubble in the U.S. for a long time, and I certainly don't mean to call when that's going to happen, but I do think that there are some structural risks to the U.S. market at the moment that sort of weigh against some of the policy elements. But I think a stronger dollar certainly poses some problems for certainly African local currencies, especially because a lot of goods are imported in dollars. And so that's, I think, one dynamic to watch out for. But at the same time, I think stronger global growth is potentially on the horizon. And I think it's very, very hard to call macro in the short term at that level. But I think if African countries continue to focus on the right priorities, I think that there's a lot of opportunities in 2025 and also the next 5 years.
All right, and talking about the dollar, we see the DXY that's having a run at this point, about 109 points, and it's looking like it's an uptrend. At this point, beginning 2025. So, do you see the DXY, hitting new highs in 2025?
Really good question. I think if you continue to see markets moving in the way they have been, what's essentially happened is that the United States assets have performed so strongly from across both public and private markets that global investors are overwhelmingly allocated to the dollar. And in my view, that is what drives consistent appreciation of the DXY far above levels where most analysts kind of thought that the dollar would get to. And I think that trend kind of continues until you see economic reversal, right? I mean, we have seen it in the U.S. at the moment. You have the highest level of credit card defaults since 2010, and so you are beginning to see that same impact on the consumer that I think a lot of African economies are feeling is beginning to take place in the United States, where there's really a disparity between, Nvidia at $3.5 trillion market cap and sort of the average American. And I think, over time, if a bubble does begin to crack in the United States, I think that would have a downward impact on the dollar. For sure.
All right, definitely. I'm sure investors will be watching out to see how that impacts risk assets, in the markets. But what would you say are the key, policy recommendations, for African governments, to foster some kind of sustainable and inclusive economic growth for 2025?
I think it's really interesting to get creative about how to attract investment into the key sectors that are needed, right? So a lot of folks talk about electricity. I think if you're in Nigeria, if you're in Ghana, if you're in Tanzania, your ability to get stable electricity that's needed for manufacturing local goods and actually taking advantage of the opportunity that foreign goods are very expensive to actually make things locally. But the problem is that electricity prices are usually a function of interest rates. It's the ability of local electricity companies to get on the ball and build more capacity, but then two, to actually borrow at rates that are sustainable. I think if you're borrowing at 35%, it's very, very difficult to build anything. So I think to the extent that African governments can attract foreign investment into manufacturing, into stable power, into improving core infrastructure, and over time, obviously, education is the way that over the long term, I think a lot of countries will ultimately see the biggest economic benefit.
All right. Thank you so much. Always great having your perspective. That was Isaac Marshall, an investor with TLG Capital. Thank you so much.
Lottie, great to see you, man. Happy New Year. Thank you.
Thank you. All right. So, yeah, it's budget season, and we've seen, subnationals and federal government reel out their spending plans for 2025. And we see the Lagos State Governor, Babajide Sanwo-Olu, signed the 2025 appropriation bill into law. Special advisor on media and publicity to the governor, Mr. Boyega, made this known in a post on his X handle. He said the budget size, 3.366 trillion naira, meant for the continuation of the great works of the Sanwo-Olu administration. All right, so right about now, it's time to head straight to the markets. Let's see what's playing out. That's in a moment after this break. We'll get some juicy stories on what's playing out in the local equities market. Do stay with us. All right, let's head straight to the markets. And we're seeing a lot happening with FBN Holdings, with a heated battle for the soul of the oldest financial services group among its principal shareholders. That doesn't seem to be over yet. We're hearing that Mr. Femi Otedola accusing other parties of trying to, destroy the institution. We also hear shareholders are calling for an emergency meeting. So much happening. We'll see how that's playing out with the stock price. We'll have Anita Edet now with the details. Great to have you, Anita. So it's here again, like it never left with the oldest bank.
Yeah, Ladi, I don't seem to be surprised with this, the battle with FBN Holdings, which initially was called First Bank of Nigeria, and then also transmuted to a holding company, and then also changed the name. But that's all those changes doesn't seem to have an effect on the wranglings and in between the shareholders and the leadership. Because at some point we've been having so many reports about that
Right.
leadership.
And it'll be interesting to see how it all plays out, with the emergency meeting. And I'm wondering what's going to happen with the share price. We did see huge volume on FBNH yesterday, and the price actually rose. That's the share price.
Not just yesterday, even the day before. That's when Mr. Femi Otedola, who is a billionaire investor and the chairman of that entity, the day that he was announced as the investor of the year 2024 by the Nation newspaper, the FBN Holdings share price, it also gained. So that was on Tuesday. So midweek trading session, it also gained. But if we can have our analyst of the day, who's will be treating the equities market's performance to tell us more about it if we had that information.
I have my popcorn.
Exactly. But Ladi, I think the cynosure of the eye it should be on the telecom sector, because at some point, this news about the tariff.
Right.
Yeah, exactly. And we have the two of them listed on the Nigerian exchange. Okay.
It's like a no-brainer, at this point, what we're seeing playing out after the tariff, hope about the tariff increase. We'll see if, this continues and they get the price that they're actually looking for.
I shouldn't be at 100%.
But hopefully, the consumers are protected regardless. But we'll see.
Okay. Right, so let's get to talk about that with my own analysis and the analyst that we'll be having in just a couple of minutes from now. Okay, so let's take a look at the intraday market performance. The all-share index of the NGX. Yesterday we were talking about the 103,000 points being the magic number, but that was not to hold, because at the close of Wednesday's trading session, the market climbed into 104,000. But guess what? At intraday, the market has climbed into the 105,000 points. So far, the highest that we'd had so far, which was sometime last year, was 106,000 points. And we seem to see the Santa rally. Santa rally normally comes within the first week of January, and it's still continuing. So we've seen the market open the first full week of January in the green. It made a pullback on Tuesday, but then for close of Wednesday's trading session, it went back into the green, gaining about more than 507 billion on the back of MTN Nigeria's gain. That was translated to about some 0.8% increase, and year-to-date 1.27%. But so far 0.84%, which was the last track that we had about an hour ago. And the share price of MTN, as well as some other high-value equities, are lifting the market's index. That's for the domestic stock market there. So we'll get to talk more about that with our analysts. Well, but let's take a look at the Johannesburg Stock Exchange all-share index, 83,778.19 index point, up by 0.75%, which was the last track that we had. And that market is still going up, although it is pulled back a bit from the 84,000 that we saw, but still in the green for the intraday trading session for Thursday. And for the two other markets on the African region, EGX 30 down 0.56%, and slipping further away from the 30,000 index point, which we thought that maybe that market index would be able to climb into, but alas, that's failed to happen. And for the close of Wednesday's trading session, 0.39% uptick for the Nairobi Stock Exchange all-share index. And of course, at the same time, the market number has been able to climb, almost heading into the 130 index point. That's about the lowest. When you take a look at all the rest are in the thousands, but this is just in the barely 100. So that's it for the market there. Okay, so now let's talk deeper about Nigeria's equities market. We're taking a look at first the telcos. We have two telcos, MTN Nigeria as well as Airtel Africa, the two behemoths when you talk about the top 10 stocks, the stocks worth over 1 trillion on Nigeria's domestic stock market. So let's talk about how this market, how are they moving at intraday? What effect are they having? Who are the market movers for intraday, and then what the outlook for the close of today's session, as well as some other developments within the market. So we have Abiodun Adedotun, who is an equity trader as well as an analyst with FBN Quest, to give us details about this. Thank you for joining us, Abiodun.
Thank you very much, Victor, and Happy New Year.
Yeah, Happy New Year. I feel to say that because I think my time is quite ticking very fast. Okay, so now tell us, there was that clamor for 100% tariff hike for telecom companies. They said they're not making profit. And yesterday we saw the Minister of Communication saying, okay, there will be that increase, which will translate to a higher cost of calls, SMS, and all of that, but not going to be 100%. So how are these stocks moving at intraday?
Of course, there's been a lot of excitement when it comes to telcos. MTN has gained 10%. About 2 weeks ago, this stock was trading at about 180, 190 levels, but right now it's trading at 240. Very, very impressive. Investors are optimistic that the big giant of telcos is back and ready to take his rightful place among the biggest companies listed on the NGX.
Okay, so now we've talked about MTN. What about Airtel Africa? Because it just pops its head once in a time and puts it either in the green or in the red. How is that share, the equity performing at intraday?
Yeah, the demand in Airtel is also has improved. It's not been able to get a lot of volumes. And you recall, Airtel is just not listed. Airtel Africa is not just listed only in Nigeria. It has a dual listing. Bulk of the shares are listed there in London. It's been positive, and investors are trying to get whatever they can get in.
Okay, so let's talk a little bit about the banking sector. I know FBN, we wouldn't want to talk about the political side, but the share price of FBNH, has it been able to hold the gains which it's recorded so far this week?
Yeah, FBN is pretty much stable, though there's been a little bit pullback, but nothing major to write about. Investors are still very, very confident in the Apex Bank and think everything continues to run.
Okay, so now before we let you go, what are your expectations? What sectors would you, because this is the start of the year, just about 9 days into the new year, and we've had so far about 5 trading days in 2025. So what are the stocks, the sectors to look out for? Not necessarily the stocks, the sectors in terms of portfolio diversion or choice of by investors?
Key sectors remain, number one for me will continue to remain the banking. There's a lot of value to be tapped from the banks. They've made so much money, and I believe they're going to reward shareholders handsomely. Interestingly, telcos appear to be in the mix again, and it's only time that will tell how much they'll be able to get, in terms of tariff increase approval. Also, we have the oil and gas sector. A lot of things is happening. They're both on the upstream and the downstream side. So companies like Seplat, Aradel, Total, it's very, very important to pay attention to these ones, and you might be able to get good value there.
Okay, so just in about less than 20 seconds, do you expect the market to hold this 105,000 index point, which is just crossed at intraday?
Of course, I expect it. I don't expect any major shock. MTN is up. It's influencing the direction of the market unless a big heavyweight decides to come and spoil the party, which I don't envisage right now.
Okay, Abiodun, I think we'll leave it there, and of course, look out for how the market ends Thursday's trading session in this very, very bullish momentum that the market is currently moving in that direction. Thank you so much for your time on the show.
You're welcome.
That was Abiodun Adedotu, equity trader as well as an analyst with FBN Quest, giving us details about the equities market, the domestic equities market for Thursday's intraday trading session. Okay, the Middle East markets, which is what we're about to see now, is actually a squarely mixed performance for 4 of the indexes that we track across the region, the Dubai in the green and the Abu Dhabi in the red. And the other side of the market, we see the Saudi Arabia, 1 on the green and also 1 on the red. In the news, what we have here is that the Saudi markets, as well as the UAE, they're eyeing a fresh wave of blockbuster IPOs following a record 2024. They had a very impressive record number for IPOs there. And that's because of the increasing appetite for technology and digital first businesses by investors there. So we see investors coming into this market, both the Saudi Arabia's, this is the Tadawul, which is the markets index, as well as the last two, the previous two we mentioned, the Dubai index, as well as the Abu Dhabi. So this is coming as the two largest economies built on a year that saw Saudi Arabia list about 57 companies, while the UAE raised about $6 billion from just 7 IPOs. So that's it for the markets that we see within the Middle East. And so far, for the Qatari Stock Exchange All-Share Index, which is today, is the final day of trading for them. So the market is just about to be closing now. Intraday, it was down by 0.14%, 10,441.53 for that market index number. So from the Middle East, let's go over to the United States, where we see today, actually, the market is closed in observance of the state's later rest. The market is actually mourning one of its oldest presidents who died. That's Jimmy Carter, who was a president back in the mid-70s there. So, but the Dow Jones Industrial Average, as well as the other two averages there, all in the red. That's for the futures. So it's closed for Thursday, but Friday the markets will be reopening, and we see that investors were digesting economic data this week, but they'll also be awaiting Friday's December payroll report, which is due out tomorrow. So that will be the payroll data for the month of December. And the market is also wary about a Trump policy causing inflation to come back to the country. And this is coming after that much-awaited interest rate cut by the U.S. Fed, where we saw about 0.25% cut, bringing the world's biggest economy's interest rate to around 4.3%. So the market is looking out for how would the Trump policy, which is just about some 11 days away before Trump officially takes office, how that will impact the markets in general and then the U.S. market in particular. Your guess is as good as mine. So just a countdown before the Trump inauguration ceremony comes into play. And finally, for the markets in Asia, we also see the market indexes mostly closing in the red for Thursday's trading session. We see at the same time they're reacting to that U.S. rate cut, less expecting a rate cut or more aggressive rate cut there, as well as China's CPI concerns, which latest inflation data for the month of December shows that the consumer inflation index, it edged up by 0.1% last month from a year ago, while the producer price index, it dropped by 2.3% year-on-year, sliding to the 27th straight month. And that's according to data from the country's statistics office. So for the Nikkei, down 0.94%, further away from the 40,000 level. Kospi was mildly up 0.3%, Hang Seng Index 0.2%, and for the Shanghai Index, as well as the Nifty 50, also mixed picture there, all both in the red for the close of Thursday's trading session, 0.58% for the Shanghai Composite, and 0.69% for the Nifty 50, 23,000, further away from the 24,000 level. Ladi, that's it for the close of the markets.
You know, it's so incredible that in 2024, you could almost see rates in your dream. We talked about rates so much, and it seems that's staying with us even in 2025.
Yeah, I think, we're also counting down to, first you said rate. I don't know, maybe you talk about inflation rates, or you talk about interest rates.
Interest rates at this point. And you can also say inflation rate.
Inflation
it all
rate.
has rates there. So at some point, I'm sure analysts and most of the guys in finance, they just wake up and say, rates, what's happening with rates? But it's still here, regardless.
And those are tag team. They're tag team.
Exactly.
Because the inflation rate would tag the interest rate side by side.
The two rates, incredible rates. Thank you so much.
Pleasure.
I need to there for getting us the details of what's playing out in those markets that we track. Let's get a check on what's happening in Europe now. We see Germany has been sitting in the economic doldrums for a while, and there's a few indicators showing that the once leading EU economy is long out globally, but there are some signs of improvement too. According to latest stats, the number of startups, we're seeing that's up, at this point. Lars Holter has more now. Great to have you, Lars. So what can you tell us about this recent trend?
Thanks for having me, Ladi. Yes, that is some good news indeed, and some unexpected news too, because in the current economic environment, many have said that it's hard to take on risk in business, but some are apparently not deterred. Last year, there were 2,766 new startups in Germany, and that is 11% more than in the year before. And it's the second highest number ever after 2021, when I guess the coronavirus pandemic with all its disruptions led to a flood of new registrations too. Now, anyway, most of those startups, as one would imagine, were in the software segment, more than 600 in fact, and that is almost a quarter, and it shows an uptick of 33% over the previous year. Much of that growth comes specifically from AI, so we're seeing again that some German developers are working hard on being a real global player in this fastest growing segment. Education and gaming were the next biggest sectors in terms of startup registration.
It seems the market is wide open for these new companies. Are most of them successful?
It's hard to say. It's always a gamble with startups. And looking at the very latest numbers, one has to accept the fact that not only the number of newly registered companies is going up, but also the number of insolvencies. And many of those seem to stem from that pandemic year of 2021 that I have just touched upon. Among the startups registered in this absolute boom year 2021, there were, for example, delivery services. Now, that's not really surprising. The pandemic at the time had forced people to stay home, and starting a business focused on delivering goods to people, whether that's restaurant orders or groceries or pretty much anything else, just seemed like a good idea at the time. Consumer demand was high and interest rates were low. Now, fast forward a few years, and interest rates have gone up, making financing these startups and any potential expansion a lot more expensive. Also, at the same time, demand is down. People are back to their normal lives. We need less deliveries, and there has definitely been a consolidation in the market, leaving some in the dust.
So what are investors looking at in today's markets?
There's not too much to look at, actually. It's a very quiet day with not much data out there. Now, that's not bad for the DAX because the German blue chip index is sitting at a new record high. They've had a very few very strong days, those shares. And today, there's not much news coming out of Asia, and in the US, markets are actually closed in memory of former President Jimmy Carter. Now, one report comes out later today that could be quite interesting. Munich Re is talking about natural disasters in 2024. The company is one of the world's largest reinsurance providers. That is basically an insurance company for insurance companies. And they're talking about natural disasters. Interesting, at a time while these horrible wildfires are raging in California, damages there are already estimated to be over $50 billion. And much of that will likely impact European companies too, including, of course, Munich Re, but also Swiss Re.
All right. Thank you so much, Lars.
Thank you, Ladi.
All right, let's get to some stories now on the African continent. See, inflationary pressure in Egypt is slowed to its lowest level in 2 years, easing the path for the North African nation's first interest rate cut since 2020. Annual consumer prices in urban areas rose by 24.1% in December versus 25.5% in the month before, marking a second consecutive month of slowing. That's according to the statistics agency. That's CAPMES. Was its lowest level since December 2022, as the monthly inflation rate eased to 0.2% from 0.5% in November last year. At the same time, food and beverage prices, as the largest single component of the inflation basket, climbed at an annual 20.3% versus 24.6% in November, but it fell by 1.5% on a monthly basis. Egypt's central bank says inflation probably continuing to slow in early 2025 due to tight monetary policy and a favorable base effect. And also in Egypt, the country attracted a record 15.7 million tourists in 2024, surpassing the previous year's record of 14.9 million tourists, and that's according to the Tourism and Antiquities Minister. He ascribed the record to the government provision of security and safety for tourists, as well as support for the tourism and antiquities sectors following years of pandemic-related challenges, which saw tourist arrivals that dropped to about 3.6 million in 2020, 8 million in 2021, and 11.7 million in 2022. The sector has rebounded and surpassed pre-pandemic levels. Meanwhile, the passenger traffic at Egyptian airports that rose 9% in 2024 compared to 2023. And now to our next conversation. Iron ore, a crucial commodity for steel production and vital to infrastructure development, has seen a price roller coaster in recent years. Following a surge during the Russia-Ukraine conflict, prices have declined significantly. Now with the EIU projecting a 5% increase in steel prices in 2025, driven by anticipated Chinese demand. Let's explore the potential now of the impact on global and Nigerian steel markets. Joining us now, we have Tomiwa Jewel as an analyst, financial derivatives company. Great to have you, Tomiwa. So, given the current volatility in iron ore prices, how will this impact the profitability of steel producers in Nigeria and globally?
Yeah, good afternoon, Ladi. Thank you for having me. Yeah, as you said, we've seen a roller coaster in the prices of steel over the last 2 or 3 years. I think when the Russian-Ukraine war started in 2022, prices went high, very high, about 70% to a peak of $159 per ton. And the reason because Russia is one of the top global producers of steel and iron ore. Iron ore is crucial for steel, and steel is crucial in real estate sector, in civil construction of bridges, houses and roads. So we've seen that interlink between the prices of iron ore and steel. And so now that the Chinese demand for steel is declining, and the Chinese demand is better because they account for 50% of total steel supply, 50% of total steel consumption. So in the last year, we've seen Chinese demand in Chinese wane because they have a declining population, and meanwhile they have a lot of investment in their housing sector. So now the demand for housing is falling in China. The demand for steel is also falling in China. So steel prices have been down basically, and why the EIU is expecting the steel prices to go up in 2025 is just because they're expecting a lot of goods from other countries. But basically, in the near term, steel prices are going to be down. And what that means for Nigerian steel producers is that being that Nigeria is a net importer of steel, we might see lower costs to acquire steel for our real estate sector, especially if the exchange rate remains stable. So expect steel prices to remain low, and that would also help to ease inflationary pressures in the country. That will also help to boost infrastructure projects in the country, because now they're getting steel at a lower price, and that reduces the cost of construction of bridges and roads in the country.
So how will the potential slowdown, in the Chinese real estate sector, affect the global demand for steel and, consequently, iron ore prices?
Yeah, so what's happening now, what EIU has outlook is an increase in price in 2025. We've seen that over recent years, we're seeing more demand from other countries apart from China. So in 2024, despite the downturn in the Chinese market, steel demand for steel was only down by 1%. And that's because other countries such as India, their consumption or demand for steel increased. So going forward, now that inflation is coming down in most of the countries, and we expect interest rates to come down, we expect to see increased demand for steel, because now there's going to be more investments, infrastructure investments, and investment in these other sectors that require demand. So what the EIU projects is that by 2026, the share of steel demand from other countries apart from China will actually rise to about 52%, and that will be the highest since 2018. So we're seeing a shift from the Chinese dominating the steel market. Now that there's a downturn in their property sector, their demand is falling, and we're seeing an increase in demand from other countries. So those are the ones that are going to underpin the demand in growth for steel in the next 2 or 3 years.
Well, what would you say are the potential risks and rewards for Nigeria, in pursuing domestic steel production?
Yeah, so Nigeria has we have a lot of iron ore deposits, and this iron ore obviously is what goes 90% of iron ore is basically used for steel or manufacturing. But so far in Nigeria, we have the Ajaokuta steel plant, which has not been functioning for a long time, and there have been many plans to revive the plant. But again, in the recent year, there have been a lot of activity in the mineral sector of Nigeria. The Russian consortium is expected, they are the ones right now that we expect are going to help revive the Ajaokuta steel plant. The Chinese, there are some Chinese companies also working with some Nigerian companies for a new iron ore to steel project in the country. And there's also some conversations with Saudi Arabia to see how they can help to develop our iron ore extraction and to also help to transform to steel. So if we see those projects actually coming to fruition, that's going to be a plus for the economy, because Nigeria has a huge infrastructure deficit. So if we begin to produce steel at scale, that's going to reduce the cost of accessing this steel, and then we can be able to increase the production, the building of houses, infrastructure projects such as road and railroad. And again, if these projects come into play, since it's going to be in the manufacturing sector, it's going to be labor intensive. So it's going to help to improve employment opportunities in the country. It's going to increase job opportunities. And again, we cannot forget the export potential too. By the time Nigeria starts producing a lot of steel, taking advantage of our rich iron ore deposits, we're able to get a lot of foreign earnings, which will help the country in terms of the Naira stability. But, a key concern is that in Nigeria, there are a lot of policy announcements without good effective implementation. So we have to watch out for that. And again, steel plants are very energy intensive. So they are going to require a lot of energy. There's going to be need for cheap, accessible and constant power supply if we really want to be able to benefit from the steel, from being able to produce steel.
Right. Well, so much to unpack there, and definitely we need more of those policies to be fully implemented. Thank you so much, Tomiwa Ajewole, analyst at Financial Derivatives Company. Thank you.
Thank you.
All right, to other stories now. We see Zambia's kwacha has hit a series of record lows since the start of the year as a severe drought has keeping pressure firmly on the copper-producing southern African country's economy. The severe effects of the El Nino caused the worst dry spell in southern Africa in a century last year, devastating crop production and forcing Zambia's authorities to cut electricity generation on the Kariba Dam as the biggest source of electricity for the country. The kwacha that plunged when Zambia defaulted on $11 billion worth of external debt in November 2020, but saw a brief 20% jump last February when it became clear its restructuring efforts were going to be successful. And we see Kenya attracted $638 million, that's in venture capital funding in 2024, topping the African continent for a second time in a row. Kenya singularly made up about 88% of the total amount raised in the East African region and 29% of the overall amount raised in Africa. However, despite the countries dominating both the East Africa region and the continent, the total venture capital funds to East Africa declined by 18% to $725 million. All right, now let's get a check on what's playing out in the crypto market. Now we're seeing red on the board again, just like yesterday. Profit taking, moving on with investors, trying to get some profit out before Mr. Market takes it back. And we see Ethereum that's down, BNB. Yesterday we saw the stable coins trying to keep up. Definitely, once you see a complete market downturn, you see the stable coins start to go up, showing that investors are trying to run into some kind of safety. Let's look at the headlines now. We see the U.S. is dominating with Bitcoin holding as U.S. entities based on, significantly, we've seen significant rise there for those entities that are offshore, that are holding in the U.S. They're dominating those, offshore, and that's according to crypto counts there. And we see the SEC in Nigeria, the Securities and Exchange Commission, they're warning that some of these virtual asset service providers might not get their license. That's if they don't meet the regulatory requirements. So we see a stern warning there from the SEC. Then the International Monetary Fund has recommended that Kenya, they should create a clear regulatory framework for its cryptocurrency market. The call is coming after rising concerns about consumer protection, anti-money laundering, and combating terrorism financing. So those are the top headlines there in the crypto market. Well, joining me now is Chimezie Chuta, the founder, Blockchain Nigeria User Group, joining me via Zoom. Great to have you on the show. Happy New Year.
Yeah, always a pleasure to join you, Ladi.
Right. So
happy New Year.
Yes, happy 2025. So we're seeing the SEC in Nigeria there talking about if you don't meet the requirements, don't expect to get the license to operate as a virtual asset service provider. What are the potential consequences, for these vast applicants who have already submitted applications that don't meet the requirements?
Okay, so typically this is going to be the usual case of many are called, but very few are going to be eventually chosen, because the business of regulation is a serious business. So you just can't license everyone that turns up, whether or not they met those conditions. In fact, the conditions should be so stringent that it will discourage unserious participants. And it's right for SEC to have that strict measures and those policies to make sure that only those who qualify get licensed, because there's so much that involves crypto when it goes in there for mass adoption, and it's not an all-comers affair. I greatly support the effort by the SEC to make it a real serious business by making sure that only qualified entities get licensed.
But how would you describe, the SEC's stance, and approach when it comes to issuing, the vast licenses? Would you say they're overly strict or just okay?
Well, I think it's a little bit strict, and it should be, because when it has to do with protecting the market, protecting the users, and also protecting the industry, then you have to understand that it's imperative that it's strictly, the conditions are strictly adhered to make sure that only the few that meet up those requirements gets eventually licensed. For instance, when you are a custodial service provider and you are not able to meet up the required amount that is expected of you to have as a capitalization, then it doesn't make sense to give you any kind of license, because even in traditional banking system, there are situations where banks are expected to recapitalize from time to time. And banks that cannot meet all those type of conditions are not licensed, or licenses are withdrawn from them. So I'm one of those people who believe that the same strict rules that are being applied in supervision, monitoring, and regulation of the financial services industry should be applied to crypto service providers. I mean, virtual asset service providers are financial institutions too, only that they are dealing with digital assets that are borderless in its character and also transferable to individuals at split seconds. So there are a whole lot of factors. But typically, the regulation and supervision of these businesses should be stricter than that which you can see in traditional financial institutions.
All right, so, we've seen the issue with the P2P market, in 2024, and how it was blamed for, some of the issues we've seen in the FX market. What is your outlook for the P2P market in 2025 in Nigeria? Is it something that will just continue, or would it evolve?
Well, I think it will continue, because P2P really doesn't derive a lot of strength from the regulators itself, because P2P is person to person. So regulation or no regulation, it can still go on. Okay, but where it in any way interacts with the traditional banking institutions, especially where a service provider is allowing users to directly make deposit through their bank accounts or off-ramp their crypto into their bank account, then I think in that area now, regulation will step in more strongly in 2024. And it's expected that all those that are licensed should definitely be able to adhere to the conditions and the reporting standards that have been put in place by the regulators. So for me, in 2025, I think the market will be usual, because Nigerians were heavy users when it comes to the P2P area. We might not be very good in the volume of assets that we transact in the exchanges, but then in terms of number of participants and users, we're going to see an increased much number in 2025.
All right, we'll definitely keep watching out for that. Thank you so much, Chimezie Chuta. Always great having your perspective.
Yeah, thank you, Ladi. It was a pleasure joining you.
All righty then. So that's how most of the markets we track are looking. Looking at crypto market, it's still profit taking going on there. We're seeing the downtrend when it comes to the Asian markets that we track, but still a lot to expect. When it comes to interest rates in the global economy. Thank you so much for watching today. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.